Hello, this is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Monday, December 8th, 2008. The global slowdown is pressuring exports from Japan. In turn, the current account surplus, now at 1.11 trillion yen, has shrunk 56.4% on the year, although widening slightly on the month in October. A survey of service workers such as taxi drivers and barbers indicate further deterioration in business sentiments. Although the survey yielded results better than expected, this was the 8th straight month of worsening sentiments, declining to 21 from 22.6. The outlook number also fell to 24.7 from 25.2. The Centix Group's investor confidence measure for the Eurozone fell for the 6th straight month in December, plunging to a record low of -42.3 from -36.4. The expectations index did provide some hope, inching up to -42 from -42.75. Inflation is retreating around the world. British manufacturers in November paid 3.3% less on the month for input materials. On the year, input price inflation scaled back from 13.8% in October to 7.5% in November. Lower input costs are now translating to lower prices charged by manufacturers. The output producer price index eased 0.7% on the month in November, bringing the year-on-year figure to 5.1% from the previous month's 6.8%. The contraction in manufacturing orders were reflected in the continual decline in the Eurozone's industrial production levels, which fell 2.1% on the month and 3.8% on the year. Orders have been declining since the beginning of the year, keeping production levels low. Meanwhile, construction output dropped 3%, and energy production edged up 0.2%. Over the weekend, President-elect Barack Obama proposed an extensive infrastructure plan as an attempt to lift the economy and provide jobs. While Wall Street reacted positively to the new stimulus plan, the market pressured the greenback. Canadian housing has fared relatively well considering its proximity to the U.S. In November, starts fell sharply from 212,000 to 172,000. Although this was an 18.8% drop, it doesn't have to be alarming as it can be attributed to the volatile multiple starts segment. Risk sentiments dominated the markets to open the week. Over the weekend, Barack Obama's proposal boosted risk appetite. As global stocks rallied, the euro-dollar pair surged overnight. This came as a result of risk appetite and the greenback losing its luster as a safe haven currency. President-elect Obama's plans will involve substantial spending and is not meant to resolve the short-term problems. This put pressure on the U.S. dollar, pushing the pair about 250 pips up. There was a bout of risk appetite at the beginning of the European session as the Asian markets rallied and the European markets followed suit. The dollar-yen pair surged 100 pips in the opening 2 hours of the European session. However, this did not last as the gains were completely paired by the middle of New York trading. The dollar fell sharply against the loonie in an early bout of risk appetite. Oil rebounded after threatening to fall to $40 a barrel. Since testing the 1.30 level last Friday, the pair plunged 500 pips. Obama's proposal put a strain on the dollar as the market shed safe haven flight and boosted the stock markets. Tonight, Japan releases its third quarter GDP. The UK releases data on retail sales and house prices. Also, Australia will post its NAB business confidence. Overnight, Japan will start with its leading index and machinery tools orders. Swiss unemployment rate is due overnight, along with German and British trade balance. This is followed by house price data, manufacturing and industrials production figures from the UK. ZEW will release economic sentiment data for Germany and the Eurozone. In the morning, the Bank of Canada decides on interest rates, and the U.S. releases pending home sales numbers. And that wraps it up for the day in Forex News. Please join us again right here at cmsfx.com.